Hey folks, welcome to Pro Trader Strategies. It's Tuesday, August the 3rd. My name's Eric Wilkinson and we're an educational company. So if you want that edge, it starts right here with education. And if you want to do that, hit that subscribe button. Next to it, there's a little bell that you can click on so that if I come on unannounced, you guys will get a notification for it. During earnings season, I'll probably do that quite a bit. Maybe not so much today because I've got a webinar going on after the close of the markets. I'll throw a link over there on the side that if you guys want to join in, there's going to be 5 professional traders there talking about everything from charting to option strategies. Guess who's the option strategies guy? That's me. I'll be there. All right, let's get on with the economic day. Oh, wait. Don't forget to smash that like button. It really does help us out. And if you have any comments throughout this, you want me to go over a specific stock, throw it over there in the comment section. I'll be happy to go over that. All right, let's get on with the economic data. Across the pond, not a whole lot going on today, but here in the United States, we got our factory orders that came in at 1.5%, expected to be 1%, and a revision to last month's number up quite nicely from 1.7 to 1.7 to 2.3. So an increase of almost 0.5% there, and a headline beat by 0.5%. That is what we're looking for. Remember, we were getting a little nervous about some of these inventory numbers and the manufacturing sector. Well, we're seeing the orders come in now. We are actually seeing it. Remember, that's why I like to look at the PMI, Purchasing Managers Index, because he actually sees those orders coming in and ramps up production based on that. So this factory orders is a little bit of a lagging indicator compared to what we would see in the PMI. We got to do a little tea leaf reading with the PMI, but at the end of the day, it does give us a little bit more forward guidance where factory orders is something that's already happened. So it doesn't necessarily help us on forward guidance. And then today, throughout the day, we got the Ward vehicle sales. So keep your eye on that. Best thing that I say is follow LeBeau, and he is the one that's going to be covering that. I think we're going to see these vehicle sales do pretty well throughout the day today. All right, so let's get on with the overall markets. Let me remember to share my screen for once. And we've got crude oil up here on the charts below that 50-day simple moving average. I thought it was a pretty good coup to get above that on yesterday to close above this 50-day simple moving average. But today we're losing a little bit of steam here. Something to note, we would need to see a lower low here to make this turn into more of a bearish pattern. Now, it's an indication when you go below the 50-day simple moving average here, but to create a bearish trend here, we're going to have to see a lower low. That I have to break back down into the value area here. So this is a value area high. We got overextended to the upside. Most chartists would look for us to come down here and at least test this 78 Fibonacci, which lines up with, let's call it $62, a $62 trade, probably somewhere between 62 and 64 is where we're going to be looking for to make a newer low there on the chart for crude oil. And guess what? I forgot that I don't have all my charts up here because something happened to my platform and I lost all the charts. So I'm going to have to punch them in for us as we go. So if I forget something, throw it out there. So let's just go with gold next. Gold coming off just a little bit today. Not seeing a whole lot of action in the markets, as I think it's a wait and see for Friday, maybe shore up some position, add some portfolio protection headed into the Friday unemployment number. And remember, today is going to be one of those lighter days for economic data. We've got stuff coming out Wednesday, Thursday, and Friday that could be market movers. So today could be the setup day where people are shoring up those positions ahead of it. And Bitcoin coming off again today. You know, we still have not covered the gap that we talked about here between this 26 to 24 area. I think that is still going to be on the docket for the market to go and cover before we see any resumption of upside here in Bitcoin there. Now let's get on with the equities. We got the NASDAQ is in negative territory by about 36, as you can see. Something to note here, we're really losing the momentum up here. We are building some volume, so we are accepting values. It doesn't seem like we are going to have a major market correction here because people are accepting value at these levels. So if we were going to get that correction, I think it would be to come down and test this value area high, which lines up with the previous high of this move. So we got a high, another actually high here break down below this would start to make it look a little bit bearish, okay? So if it breaks down below that, that's going to make it look like we're going to resume back down to trading around the 1380 area, about 1,000 points down from here, which seems like a big move, but over the course of a couple of weeks, that's not really that major. We got the E-mini S&Ps, same setup. If you're looking at these charts across the board with the E-mini S&Ps, the Dow Jones Industrial Average, all of these are starting to look like they're starting to settle down in here, in and around this area. Note here in the Dow Jones Industrial Average that we've got price acceptance at this level now. We've gotten this paradigm shift where the time volume, or the time node, I should say, is up here in and around this area, the volume node a little bit lower. We're starting to see that shift. Acceptance of value is bullish here at these levels. Now let's talk about a couple of trades that I was looking at here today. One of them that I took off, Las Vegas Sands, it's a loser, folks. It started going against me. I was looking to cover it yesterday, and it got away from me, obviously, but today continued to that downside. Now the rest of the casinos have done pretty crummy, to be quite honest. Maybe Penn is the one that's holding up, and MGM has been holding up a little bit better than especially Las Vegas Sands. I thought we found a bottom when we got this bottom pattern right here. I thought that this was going to be the bottom. Now yesterday, obviously, there was no confirmation. The setup candle yesterday, confirmation, nothing there. It is a bearish candle engulfing that. That is a continuation of bearishness. Today we're getting some follow through there. So I decided to get out of my October trade in here, and I had on the October, was long the 45 calls in there. I paid $2.37 and I got out for $1.38. So lost $1 on that trade, both my IRA and in my trading account. So I'm out of those trades. Sorry, my camera looks like it's just showing my forehead. And then the other trade that we were looking at was Delta Airlines here. We're getting a little bit of a bottom now. If you guys remember last week, we were consolidating here, and I talked about putting on the iron condor. Well, volatility came out, and we showed how the underlying not moving and the volatility come out helped that position. Well, we got the volatility coming back into this. So I'm going to talk about this trade for the iron butterfly. Very similar to the iron condor, different strike locations, a little bit better reward with the iron butterfly. But with that said, you're also having more risk. So risk comes reward. It is going to have about the same defined risk area that we are going to be looking at with the iron condor versus the iron butterfly. But the iron butterfly, while it carries more risk, there is more reward with this trade versus the iron condor. So we'll talk about that. But one thing I wanted to talk about with the iron condor, so we'll talk about this a little bit this afternoon in the webinar, where I'm going to talk briefly about how we would have adjusted the iron condor to increase our probabilities of success. Now, this market has kind of gone against us in this iron condor. It's coming down to test the lower put wing, or that short put spread. And therefore, that short call spread is almost worthless at this point. So we have a decision to make here. If my assumption is still intact, where I think it's going to stay around here, there's one of two things that I can do. I can take off that short call spread for zero outlay of cash, or I can roll that short call spread down closer to where the market is currently, right around 40. So I can pick like 40, 41 and do that call spread there. Now I've tightened up my iron butterfly dramatically because I brought the short call spread wing all the way down to where my short put spread originally was, or very close to that. But while doing that, I'm collecting another like 25 cents on top of the original 30 cents I collected. So I get to keep the original collection. I get to add on this next collection. Now my total collection is just better than 50 cents. So I've shifted the paradigms into my favor, where now my risk reward is about even. So I've lowered my risk, increased my overall reward, but the probabilities of success by moving that short call spread down start to decrease a little bit, because the area in which I can see this underlying trade is much tighter now. And with that tighter spread, that tighter iron condor, because those are at the monies, it's going to take a little bit more time to have that theta decay work in our favor there. We'll talk about all those details in the webinar this afternoon, so please check that out. Also, that the webinar this afternoon, that's going to be on synthetic longs and synthetic shorts. I'm going to show you how you build a synthetic long or synthetic short so that you can save on their capital outlay for these trades. If I go out there and buy a stock, I basically have to put up 50% margin, but I'm going to show you a way to cut that even in half from there. All right, so we'll talk about all those details this afternoon in that webinar that I have the link for just next to us. Otherwise, check us out on Thursdays where we are doing swing trades. I'm going to be talking about how you look at a swing trade, for instance, this being a bottoming pattern, not quite confirmed yet, but then how to set up a trade around our assumption. It's not just buying a call for a bullish assumption, folks. We look at the details and determine if those prices are expensive or cheap, and then that determines whether we're buying or selling. All right, and I'll show you how to easily spot that stuff in today's webinar. And so before I go, make sure you guys subscribe and hit that bell so that you get notifications. Comment, I'll circle back around for you folks to make sure you guys are all clear of concept. And finally, smash that like button for us. All right, if you can't take that, take it easy. And bye for now.